when you realize a massive omission that's happening with silver right now from the Silver Institute. There's a Senate subcommittee, S.2768. I'll read to you just the first paragraph of this Senate subcommittee meeting in 1942. It says the present consumption of silver for war purposes is at the rate of about 100 million ounces a year and is growing rapidly. According to the War Production Board, it is only a matter of months before war demands will have increased sufficiently to require at least 200 million ounces of silver per year. 1942, there's a Senate subcommittee meeting saying 200 million ounces a year. You go look at the Silver Institute numbers, military is just somehow not in there.
The issue of silver manipulation is a widely debated issue in the precious metals space. It is common knowledge that the precious metals market is a heavily manipulated one, particularly due to the activities of the so-called bullion banks like JP Morgan, Goldman Sachs, and HSBC, each of whom has agreed to pay heavy fines in the past 4 years in relation to the manipulation of the precious metals market. Additionally, the current state of the market, particularly in relation to silver, which has failed to make new highs in over a decade. Historically, silver has traded in tandem with gold, often taking off after gold does, and even outperforming the yellow metal during bull markets. However, 2024 has been somewhat of an anomaly. Gold has made new highs several times this year, but the same cannot be said for silver. According to renowned bullion dealer and president of Miles Franklin Precious Metals, the anomaly with silver in 2024 is much deeper than many people realize. During a recent interview with Pinnacle Digest, Andy exposes another important anomaly that he says many investors are not paying attention to. This anomaly is the gold-silver ratio. Andy says this ratio is near all-time lows and has strayed very far from what he calls God's ratio. Andy believes this is a huge signal that something massive is about to happen, and when it begins, silver stackers will benefit greatly. In the interview, Andy talks extensively about silver manipulation, pointing out that it goes deeper than many people imagine. Andy believes the bullion banks are not alone in their manipulation of the silver market, and that the suppression of prices goes much deeper with the full backing and involvement of the US government and the military-industrial complex. Andy shares a brilliant analysis of the accumulation of silver by central banks, particularly India and China. Andy talks about how the exchanges are being bled dry of silver, why silver's true value is way higher than the current price, and why the all-at-once moment that would see silver's price skyrocket wildly is much closer than many people think. As we present clips from the video, please take a little time to like this video, subscribe to the channel, and turn on the notifications bell to be instantly notified every time we upload a video. Thanks for the support and enjoy the video.
The Silver Institute will tell us that there is going to be about a 240 or 50 million ounce shortfall between supply and demand this year. This is the 4th year in a row, I believe. It is now a structural imbalance. Greater demand than there is supply. That's number one. If you went back and dug a hole 5,000 years ago, you would see a 16-to-1 geologic ratio between silver to gold, meaning 16 ounces of silver would come out of that hole for every 1 ounce of gold. And it was that way all through human history for thousands of years. Even when Sir Isaac Newton was trying to figure out how much gold and silver should he use to figure out the relationship in the currency, he chose a 16-to-1 ratio. That is, let's call that God's ratio. That's the geologic ratio. And it had been that way forever. And we get to the Industrial Revolution, largely because of logistics, where you can have $1 million worth of gold in a backpack and run $1 million worth of silver is going to weigh, 2,000 pounds or whatever. And so gold's role as money, gold's role in logistics, and silver's role as an industrial application for many applications, anything that conducts electricity, basically, that ratio had been skewed to about 42-to-1. Right? That's man's ratio. The price is 42-to-1, but the mining ratio, the geologic ratio, always stood at 16-to-1. So that made silver a good value just because of that imbalance. Well, let's fast forward to where we are right now. And we take the price of gold today of $2,515 and the price of silver, call it $28.50. The ratio, God, is that right? Is 98. That can't be right. Is that right? 25.15 divided by 28.5. 88.2. That's more like it.
Yeah.
At an 88.2 to 1 ratio, you are talking roughly 0.5% of the time over the last 5,000 years we've been in this high ratio, which is manipulated to all hell. In every
Right.
sense of the word, this is an anomaly, and it becomes more of an anomaly when you realize that guys like Keith Neumeyer, my buddy who was the CEO of First Majestic Silver,
Yeah.
one of the biggest mining companies in the world, will tell you and tell me and tell publicly that that ratio geologically, God's ratio, is now 7 to 1. It's coming out of the ground at a ratio of 7 ounces of silver to every 1 ounce of gold. And that's because, like your skin is epidermis, silver is found in nature in a form called epithermal, right near the surface. Big deposits were found a long time ago. So he's saying it's coming out of the ground at 7 to 1 because it's depleting in nature. And the price ratio says 88 to 1. It's averaged 16 to 1 for 5,000 years. And the price ratio, divide gold into silver, really since the Industrial Revolution has been about 42 to 45 to 1 on average for almost 200 years. In every respect of the word, we are in rarefied air. And when I look at the things that over 35 years that I've done that have proven to be uber successful, they've always centered around identification and exploitation of price anomalies, whether it be the Swiss franc and gold, whether it be gold and silver, whether it be numismatics and bullion, whatever it is. When you see an anomaly, it's there for a reason. There are 8 banks right now, 8 Western banks, commercial banks, that hold the largest concentrated short position of any commodity ever traded in the history of the COMEX market, ever, in silver. This little tiny itty bitty market, you have 8 of the most powerful Western banks in the world stepping on it so that it will not go up.
Andy believes that the suppression of silver prices is nearing its end, much sooner than most expect, and that this shift is being driven by China, other BRICS nations, and their allies. The world is currently experiencing a major geopolitical transformation, one that threatens to shift control away from the West and toward the East, or at least create a more multipolar world where various regions have greater influence over global politics and economics. According to Andy and other resource analysts, this new world order will diminish the role of fiat currencies like the US dollar, while commodities such as gold and silver will finally reach their true market value. Andy suggests that a commodities-backed financial system will provide far more stability and reliability than the current debt-based fiat system, which is easily inflated and weaponized. He explains that the foundations for this new system are already being laid, and once everything falls into place, gold and silver prices are set to skyrocket. Let's get back to the video.
Ask yourself this question. On the LBMA, the London Bullion Metals Exchange, they admit to having right now about 800 million ounces of silver, of which 500 million belong to the ETF. So they say we have 300 million. They also say that's the lowest position they've had since they started keeping records because it's being drained. We see massive, massive deliveries. In fact, just to highlight that one point, since 2020, when stand for deliveries became a common occurrence, and before that, no one stood for delivery. I started doing podcasts in 2020, a lot of it with Liberty and Finance screaming, they're draining the exchanges. I've never seen this before. No one ever stood for delivery. Well, now, since 2020, 2,136 tons of gold have stood for delivery and 24,072 tons of silver have stood for delivery. Well, that's just off the COMEX, and it goes to say these are staggering figures, but do not include exchanges for physical, which is a significant but unknown portion where swap for London forward contracts and then delivery taken, where you can buy a contract in the West and stand for delivery in London. We're also seeing stand for delivery in China because there is a little known contract that was developed in 2015 where there is a Brinks facility in Hong Kong where you can buy contract in the West and deliver it privately to this exchange in Hong Kong, where it's then trucked over to the Shanghai Gold Exchange and sold. But that's for another discussion. But let me just simply say this. The LBMA will tell you that they have, in essence, 300 million ounces of silver that are not owned by the ETFs. They will also tell you that they will admit to trading 292 million ounces of that silver per day, every day, right? But they also will tell you that those numbers of 292 million ounces a day, basically the entire stash is traded every day. How the hell does that work? But then they go on to say, oh, but by the way, we're only posting the final settlement numbers, so the trades themselves are 10 times that number. So they're basically telling you they're trading upwards ends of 2.9 billion ounces of silver per day, every day. That's 3.5 times annual global mine supply, of which 95% of those trades are paper promises. In other words, they overwhelm the system with paper, the commercial banks who have unlimited money, backed by the Western central banks who want to be able to produce and create high-tech weapons. And if you don't have cheap silver, you can't do that. And for the first time, these countries are now coordinated, sophisticated, and motivated and wealthy enough to stand for delivery. They are beating us at our own game, like jiu-jitsu, where you use your opponent's leverage against
momentum.
you. They are using our leverage against us. So how many people know China? A lot of people know they're the largest producer of gold in the world. How many people know they're the second largest producer of silver in the world? Yet,
right behind
they're
Mexico.
all around Latin America, buying all the silver concentrate and the silver doré, which is unrefined silver that comes directly from the miners. And instead of waiting till that silver is refined and is then traded on an exchange like the LBMA or the COMEX, they're buying it in unrefined form, paying double what the West will pay all throughout Latin America, shipping it home to China and refining it there. Therefore, it didn't come off of an exchange. It doesn't affect the price, and no one has any idea how much silver they are really accumulating. So when you see India import almost 800 million ounces of silver in the last 3 years, and China now becoming a net importer instead of a net exporter and buying up all the unrefined silver they can find, draining the exchanges, this is one of these deals that will wake up on a Monday morning one day and be, oh my God, what is that right? Could it really be that high? So yes, silver still to me is wealth, but I will tell you in all of my career, I've never seen a better investment than what silver has in every metric: supply, demand, plurality in demand, military, green, digital, electric, electronic, investing. There are very few things that check all the boxes quite the way that silver does.
Andy suggests that all the signs point to something much bigger than we can even grasp. Central banks are purchasing gold and silver at record rates, while commercial banks and large investors are engaging in heavy price manipulation. According to Andy, this coordinated effort, some pushing prices down while others are quietly buying up as much as they can, signals that a major shift is on the horizon. He warns that by the time retail investors catch on, there may be no physical silver left for them to buy. Meanwhile, signs of economic trouble continue to mount daily, with all the world's major economies facing serious challenges. Andy stresses that now more than ever, investors need to be fully diversified, and precious metals like gold and silver should be a key part of that strategy. What are your thoughts on the real value of gold and silver? Do you agree with Andy's predictions about the end of silver price manipulation? Let us know in the comments below. For more content like this, don't forget to subscribe to our channel, hit the notification bell, and explore our other videos. Thanks for tuning in.